What's up, guys? We've got another educational video for you here at Santiment. For those who are visiting for the first time, Santiment is the leading on-chain social and development activity platform for the masses. Over 2,700 assets are available to explore and improve your trading and investing, uh, education, and decision making instantly. So, with that said, today we're going to do a quick update on funding rate, how it works, how the landscape looks right now here in the final week of 2023. Day after Christmas is when I'm recording this. So let's see what's going on. For starters, let's look at the Academy and understand what the definition of funding rate is. The funding rate is a recurring fee that long positions pay to short positions, or vice versa, at predetermined intervals, usually every 8 hours. That's what you'll usually see on like Binance, whereas something like DYDX and some others might be on more of a 1 hour basis. So it depends on the exchange, but the biggest by far is still Binance. That's where you'll see a lot of heavy weight in terms of the funding rate when you average things together. Funding rates aggregated. Metrics use open interest for aggregation, meaning the contract with the biggest open interest will have the biggest impact on the final funding rate aggregated value. There are three types of funding rates: aggregated metrics, funding rates aggregated by exchange, funding rates aggregated by settlement currency, total funding rates aggregated by asset. Now, these are all available on Santiment and the Sanbase platform or the API. Today, we'll just be looking at the basic funding rate and the theory behind it, which has been back tested many times, and we've seen this come to fruition more often than not. When there's a lot of longing going on, or people are betting in favor of the markets going up, that lessens the likelihood of that happening, and it's more likely to see a correction. On the other end of the spectrum, if there's a lot of shorting and people betting that the prices will go down in the markets, that's when those liquidations, or essentially the point in which betting against the markets goes too far against them, their entire position for hundreds or thousands or who knows how much money they had will be what's called liquidated, turned to zero, and that will actually act as rocket fuel to help prices rise. So, long story short, the prices often go against wherever the direction the crowd is pulling them. So, if the crowd is really trying to pull prices up through tons of longing, prices are more likely to correct to liquidate those longs and neutralize the perpetual contract funding rate back to zero. On the other end, if it's too much shorting and everyone expects prices to keep going down and they're trying to profit off of the pattern that prices are going down, then you're more likely to see the price move up, liquidate those shorts, and neutralize the funding rate. So the funding rate's always trying to stay close to zero and resist the extremes that the crowd is trying to push it in. Now, we have a model that was introduced about 2 years ago that looks at the average funding rates for many different assets. We're looking at roughly, I think, 70 to 80 different assets here, maybe a little less than that now. But basically, what the intention of this is to show you when there is an extreme amount of longs, which are shown in red, or an extreme amount of shorts, which are shown in green. And right now, it's a whole lot of longs, as you would expect. We've been on a huge rally, especially on the altcoin front, for a little over 2 months now, going back to around October 15th when the rally started. So lots of imbalance going on with traders trying to bet on prices moving up and longing, trying to leverage, 3x, 5x, even 50x, whatever asset they believe is likely to go up. And there's just tons of extremes out here. Like I said, if it's in red, that means it's at a higher higher than neutral area. And the only ones that are in neutral are Compound, Polkadot, Solana, Wi-Fi, and Zcash at this time. Pretty much everything else here is in red, indicating there's a bias toward longs. So that means that we are at a higher risk of seeing some tops come in the near future. You might see this one for Binance Coin. This apparently is a bit of an error because, ironically, the native token for Binance Coin is seeing a strange number reported by Binance at the moment, which I don't believe is true. It's just a data error. So ignoring that, everything else should be pretty accurate. And there's also, a measurement of multiple exchanges that comes into these. So it's not just Binance. Sometimes it might be looking at DYDX or Deribit, to name a couple other ones that we track. We also have BitMEX. So looking at a few extremes, I mean, we see iOS, we see Quantum, we see Zencash, Basic Attention Token is up there, Dash, Digibyte, just to name a few. And this really gives you a lot of information and context as to which ones you may want to be a little bit weary of. Doesn't mean that if it's getting long, it's automatically going to correct, but just like MVRV, the higher up it goes, the more risk there is. And I brought up a few examples. We'll start with just a Bitcoin chart where we can see these bars here, every 8 hours, they're firing off. We're just looking at the Binance funding rate in terms of borrowing Tether to either long or short. And we saw a significant amount of longs going on Christmas. What do you know? People were feeling optimistic on the biggest, at least the biggest US holiday of the year. And sure enough, right at the tail end of that long bar, we saw prices drop and they still haven't recovered. And we're still seeing some longs going on as people probably started to buy the dip here, hoping it would go back up. And it hasn't yet. It's still sitting at about 42.4K after I believe it got just as on 4 days ago, it got just below 44.2K. So this is what I'm talking about. And if we zoom out, let's just go to the last year. Well, the biggest shorts all happened around this time. Like I said, mid-October, right around October 15th here is when prices started to take off. But look at all this shorting that was going on right here. Yes, it was mixed with a little bit of longs, but remember the dark green, this is just neutral. You'll notice there's like kind of a flat pattern here. This means it's at 0.01%, which is kind of the resting area for funding rate. So even though these were green, they're actually below neutral still, even though they're slightly above zero, indicating there's just a tad more longs than shorts. But especially when there's more red here, indicating there's more shorts than longs. I mean, look at this huge one here. This was the longest bar, I should say, the largest bar indicating shorts were happening over the past year, and prices immediately took off right afterwards. That is not a coincidence at all. There are anomalies, right? We can see like a big bar here for shorting, where right after it did go down. But just like anything, knowing that it's not a perfect science and playing the probabilities can do you a lot of good. So try to counter trade these kinds of patterns where you see a lot of red bars. That's a good opportunity to buy. If you see a lot of high green bars, it's more dicey to short in a sector that has gone up as much as crypto has over the last decade, or even 5 years, or even 3 months. But nevertheless, keep in mind the fact that the suggestion here would be that you could, play a risky game and short when you're seeing a huge amount of longs. Not investment advice at all. Many people have gotten burned just by playing the perpetual contract funding rate game, and you want to make sure you're supplementing this with other metrics. But right now, as you'd expect, big amount of longs, and the biggest just happened yesterday on Christmas, which is why it's so important to talk about right now. Now, I've got a few other examples. Looking at Dent, for example, which was one of the higher ones on the chart, you can see there's a significant amount of longs going on. The previous time that we saw some bright green here, prices were dropping. That was back on December 15th. Other times they may just kind of flatten out until it goes down again. And once it goes down to neutral, yeah, prices start to go up again. So even right here, you see how it was neutral during this big climb up. And then obviously we had the big bright green and it went back down. Not always going to be perfect, but keep in mind, you want to be careful when it comes to these kinds of patterns. Phantom would be another one. You can see that it's gone up, just since December 19th, the past 1 week, price is up 32%. So Phantom is showing some serious momentum in the upward direction, but right when we started to get this big grouping of bright greens, yeah, prices started to take a hit and they haven't really recovered yet. So probability says that Phantom could still be in trouble until this long ratio starts to get back down to a neutral territory. And then finally, we have Tether, which has just been on an unbelievable run. If we go back to takeoff point on, what is this, December 7th, and I know it actually went even higher before that, but just in the past, 19 days, we're talking about a 148% rise. And now all of a sudden, we're getting shorts, which is interesting. So everyone is expecting Tether to start correcting here, and that's going to potentially contribute it to rise even further because of the fact that there are shorts that are now ready to get liquidated and can propel prices up further with the help of leverage and margin types of trades going on. So it goes on both ends of the spectrum. This is one of the few that are seeing shorts right now, by the way. This was hard to find. I had to do a lot of analysis on different assets that were getting shorts, but Tether is one of them, and I'd be a little bit more optimistic, as much as you can be for an asset that's gone up this much, just by the fact that it's had such a big short bar come up after a brief stint back in neutral. It just went right back to short. So interesting to see there. And one thing I want to note, regardless of whether you're bullish or bearish on the markets, I mentioned MVRV. It works similarly to funding rate, where lots of high average returns will show up as being overbought here and being in the danger zone. So note that almost everything on this model that we have is showing overbought or semi-overbought, and this just means that on the midterm, which is what this model is measuring, uh, looking at the 60, 90, and 180 day MVRVs, it's showing that there's a whole lot of high returns going on. And when you combine this with super high funding rates, which are also in red, indicating, risky, that's a recipe for a correction coming eventually. We're still not going to give investment advice or say when that correction is coming, but when it does happen, at least based on where we're at right now, these two models are suggesting that correction might be pretty vicious. So just be careful with that. And then one other thing I wanted to mention before I go is social dominance as well. So in case you guys haven't seen the study, we recently released a great stat indicating that 72% of assets that hit the top 3 on our trending tokens countdown see a correction, and shorts end up being a profitable thing to do. So we're talking about shorts on this educational video. Looking at social dominance is a great way to understand it. These ranks next to it on our activity matrix model, which you can get as part of the Sanbase PRO membership, they basically indicate, this 2 next to Civic indicates that out of the past 90 days, it's having its second highest day of social dominance right now, the most discussion relative to all the other coins in the cryptoverse is going to Civic right now at a very high rate. 0x is up there, Chromia, Origin, Lever, The Graph, Elf, Matic, Swipe, and Seller are the ones that are seeing the most notable upticks in social dominance at this time. So if you combine that with something like funding rate, you could end up finding some pretty hidden gems that could be short opportunities if that's something that you're open to doing. So just keep that in mind. I hope this was helpful, and I will talk to you very soon, guys. Thanks for watching.